So how did I make $1,012 trading Amazon call options? So looking at Amazon on 7-Eleven at 9:43, 7-Eleven, Amazon. Seven 11 9:43. $9.43, right? I said. Yeah, so 9:43. So 7-Eleven 9:43. Which is this candle right here. So basically I waited for Amazon to bounce off that 9-day moving average, and once it approached the 9-day moving average and bounced off of it, it didn't go through yet. It actually broke through the 9-day moving average at one point and managed to reach all the way to the 20 and 50-day moving average, but it used both of those moving averages as support. It regained control of the 9-day moving average, and so once the bounce occurred off that 9-day moving average, I sold out the position at 9:51. So within that same candle, I sold out the position, and I basically, that's how I made $1,012 trading Amazon call options. So basically, the reason I played call options that particular day was because, let's see. Reason is because if you look how the moving averages look like on this day, on July 11th, usually when the chart's moving averages look exactly like this, usually it tries to indicate that that particular stock will be in a bullish trend for pretty much that whole day. And me, just by taking a look closely of just analyzing the moving averages and having past knowledge of analyzing how the moving averages look like, specifically when I look at the moving averages, I try to tell if it's in a bullish trend or if it's in a bearish trend. Usually I would say probably the easiest trick to in a way to kind of know if a particular stock is in a bullish or bearish trend is try to stick to the 9 and 20-day moving average. Specifically, if the 9-day moving average is above the 20-day moving average, usually that's a sign of bullish momentum. Now, if it's vice versa, where the 9-day moving average is under the 20-day moving average, usually that indicates that that particular stock could be entering into a bearish trend. So I would say that's like a little cheat code, not a lot of people know about. Usually I would say stick to the 9 and 20-day moving average if you're trying to differentiate the situation of that particular stock, if it's in a bearish or bullish trend. Let's see if we can make an example. I wouldn't say this is 100% foolproof, I would say, but let's look at today's chart, right? So here it's a little difficult because you can kind of see that, okay, well, pretty much the chart looks very sloppy, right? So here's what you could have done, right? You could have played Amazon put options, but by the looks of it, if you look closely, right, you can see that the 9-day moving average was pretty much under the 20-day moving average for this candle, this candle, this candle, this candle, and I guess you could say this candle too. So this is how you could have played put options, right, on Amazon. You could have played put options on the 12 candle as soon as it approached the 20-day moving average, waited for a rejection, and basically your selling point would be once Amazon approaches the 9-day moving average or the 50-day moving average, and that would be your selling point. And so just basically when when you go into a trade, try to go with a game plan. Try to go with a realistic a realistic game plan, and try to be realistic with your percentage targets that you're trying to aim for. So if you're trying to aim for a, I don't know, a 5 or 10 or 15% gainer, try to stick to that percentage target. And let's say, I don't know, let's say you're in a position and you're like, oh man, this position that I'm in, it's not looking so good. The trend, I don't know, I guess it changed. And now I don't feel so comfortable in this trade that I'm in. Try to be realistic of what's the most that you'll take as a loss. So for me personally, when, if I'm not comfortable in a trade and I feel like, oh man, I'm starting to lose hope in this trade, or I guess like trade idea, I'm just gonna sell out for at least a maximum of a 10 or 15% loss. Usually if I'm feeling a little bit, confident, right, I'll try to stick around the 20-30% target of a trade being down. But usually that's not really much the case anymore for me, because I guess you could say I've disciplined myself already, so I know when to take my losses. Usually, like I say, if I feel like a trade is not going my way, I'll try to take a 10 or 15% loss and just move on to the next trade. And basically from there, I'll just try to be a little bit more careful, and I'll try to analyze the chart a little bit more, with precision in a way. So usually when you're day trading or swing trading, try to buy options that expire in a month, or that expire, I guess, try to have, try to buy options that way, that will expire in a month or in 3 weeks, 2 weeks. That way you can have time on your side and you're not second guessing yourself, like, in case a trade does go sour all of a sudden. So I would say just try to, be very careful when you're trading, day trading or swing trading. That also goes to leap options trading, or I guess when you're doing leap options, I'm sorry. So yeah, I mean, just try to be careful when it comes to trading options. Options is very dangerous. Like any other thing, like in the market, nothing is 100% foolproof. So, try to have a game plan set in mind. Try to know when you'll take your wins. Try to know when you'll take your losses. At the end of the day, I would say if you discipline yourself how to take your wins and how to take your losses, I'll say that you're pretty much mastered somewhat of the trading game. In the trading game, you always have to take some wins, you always have to take some losses. That's just part of the game. That's really much to it. So that is pretty much it. This is not financial advice. As always, take care and bye.